Welcome back to episode 21 of our Investing in Germany community investing. Today we will answer two timing questions. First is the arguably biggest stock market wisdom out there: sell in May and go away, indicating that you should sell all your investments over summer. Let's find out together how much truth to that is and if you should sell all your investments right after watching this video. And second, let's answer if we should change something in the rhythm of our community investing videos. Ready? Let's go. Sell in May and go away, but remember to come back in September. That's pretty self-explanatory, I guess. The old stock market investing wisdom wants you to sell all your investments right now because the stock market goes apparently down in summer. That's at least what the wisdom is suggesting. But is that true? This chart shows the German stock market, the DAX in dark blue and the MDAX in light blue, and the American stock market, the Dow Jones in dark red and the Nasdaq in light red, all with their average returns of each month over the last 20 years. Let's take a closer look at that. We can clearly see that March and April, as well as October and November, have been the best investing months because they have been positive over the last 20 years. So when you sell in May and go away, you get the March and April returns, and when you remember to come back in September, you get the October and November returns. At least if you come back at the end of September, because September is actually the worst month of all. Alright, should you do it now? Should you press the sell button? I wouldn't. And over the last 12 years that I have been investing in the stock market, I didn't either. Because the chart looks to me a little more obvious than it actually is. I mean, look at January, February and May. All of these months are either mixed months or they have zero returns. And no matter how hard you try, you cannot predict the stock market. Thousands and thousands of people in history have tried and every single one of them failed. And if you think about it fundamentally, if, big if, the strategy would work, people would arbitrage the out of it until it doesn't work anymore because everyone would be doing it. This is not a secret strategy we're talking about here. This is one of the most common sayings in stock market history. And if it works this year and the stock market is higher in September, the media will write headlines that the saying is true. And if the stock market is lower this September, they will not talk about it at all. So, always do your own research and don't believe in questionable sayings. And the second timing question is about the rhythm in which we publish these community investing videos. Over the last 21 months, every first Friday of the month was a video like this. And to be honest with you guys, I'm not happy with this anymore. We put a lot of effort into our videos, thinking of video ideas, scripting, editing. A lot goes into the videos behind the scenes because we want to provide value to you guys with every single of our videos. And the community investing videos over the last months, I don't know, man. Do they really bring value to you guys? I watched the last half a year or so and they're all stock market is up 1%, stock market is down 2%, we got a little dividend this month. For us long-term investors, there's just not much happening on a monthly basis, to be honest. So our suggestion to you guys is, how about we do these community investing videos every quarter instead of every month? Meaning the next video would come in August, which is also our anniversary month because we started the community investing in August of 2021. Let us know what you think in the comments. We think it's a great idea to improve the overall quality of the channel, and it will also improve the community investing videos if we combine 3 months into one video. We got new charts because the interface of GetQuinn changed. Isn't that exciting? What a time to be alive, huh? Again, what I have been saying earlier, stock market is down 1% over the last month, blah blah blah. But the new interface of GetQuinn shows really cool stuff when it comes to dividends. It shows the upcoming dividends as well as the dividend growth. The March dividend we got in the high safety investing strategy, for example, was 12.46% higher than the March dividend in the year before. Isn't that cool? At least our dividends are keeping up with inflation. And there's also a new chart that we wanted actually for a very long time, because the minus 9.35% you can see in the overall chart since the start of our community investing doesn't account for dividends or for rebalancing. But now we have a total performance chart that shows a minus of just 3%, accounting for everything. I think that's really cool, and given everything that is happening in the world, -3% despite inflation and the war, I think that's pretty good. Passive income investing strategy down by 0.64% last month, after it was down by 0.69% the month before. You see where I'm going with this, that videos once a month is not providing any value, do you? And after the tremendous dividend in March, 622% higher dividend than the year before, we expect 281 dividends in 2023 for every 10,000 euro invested, almost a 3% dividend yield. That is on average 35 euros in dividends when factoring in the break every 2 months. So April was 0, for example, while May should be the second best month in 2023. The break is because of the way the ETFs pay dividends. They are aligning, so in January, April, July and October, no ETF pays a dividend. As soon as we rebalance and get a different ETF in the portfolio, this might change. I like these new charts, to be honest, because they'll also show that we are not down by 6.18% as indicated in the long-term chart. We are down by a little over 2% when factoring in dividends and the rebalancing that we did. So almost 1% better than the high safety investing strategy, which should make the most of you happy because most of you are invested here. And last but certainly not least, high return investing strategy also down 1% as all other strategies. We are having a run here, I feel. So let's see if we can just get this in the positive returns over the next months here. Dividends in April were tremendous again, with €4.50 for every 10,000 euro invested. Last year April was no dividend, that's why there's no percentage here. Overall, we expect about a 2% dividend yield over the year 2023. So, total return, not quite 14% as seen in the chart above, but also not a lot better with -11%. Here we are still waiting for the recovery of the tech sector in order to come to positive returns. As soon as tech recovers actually, we will have multiple investing strategies with green charts. If you want to join us on our journey towards positive returns, you can open your free Fidelity investment account online in less than 5 minutes. After that, please do the video ident, which is easy and online, or the post ident, which you would have to go to a post office and identify yourself. After that, Fidelity will set up your account, which usually takes a day or 2, and then they will notify us electronically that your account is opened. And then we will reach out to you in order to set up a meeting to discuss the perfect investing strategy for you. See you next month or in August, investors.